Peter, if you don't mind, explain a little bit about tax loss harvesting. How does that work? Why is it such an effective tool?
So if you, most of the time we don't talk about it until November, December, but so we get to that point of the year and you've got some realized gains that investments that you sold during the course of the year, but you've got some fund that's down. You can just by selling that fund, you can offset that taxable income by recognizing that loss.
Okay.
So, in essence, the investment's already down, but you've created taxable income by recognizing some gains. So by recognizing that loss, now we've offset the gain, and in essence created back to tax-free income just by recognizing the loss.
And then you can buy back in, but there's something called the wash sale.
30 days.
Okay.
So you got to wait 30 days before you repurchase the whatever it was that you just sold at a loss.
But let me go back because I'll use ExxonMobil, right? So correct me if I'm wrong, because I'll go back to kind of Derek's point.
Exxon or Mobil.
There we go. Right? So client has ExxonMobil. It's down, 90% that particular year. They can sell ExxonMobil, buy Chevron, still hang out in the oil space, and then 30 days later buy back into ExxonMobil. Is that how it works?
Right. As long as they're not buying Exxon. Mm-hmm. Chevron, basically the same company, but by purchasing that with the funds that you just sold Exxon, you're avoiding the wash sale rules.
Yeah. So and that loss can be used for deductions and to offset future gains that you might want to pare down gains in a future year.
Well, that's what I was going to say, Derek. So then walk us through 2022. So why 2022 was such a busy time for us is because of that. I mean, because we said now is the time to take advantage of that because there's also a carryover, right? You can, so even if let's say you harvest losses and now you have 20 grand in losses, then what?
Yeah, I mean, conceivably, you could. So if you don't use the 20,000 in losses in that year, 17,000 of it's going to carry forward to 2023 in that example.
And you get a deduction of
and
3.
You get the deduction of 3. But typically we talk about harvesting when there's already gains, but there's possibility that you've also got you've got losses that you've realized that now you can maybe work into diversification by taking some of your gains from some of your other funds and offsetting losses that way as well.
Well, when I think, Derek, you had mentioned it too, because sometimes our clients are business owners and we'll say, look, when are you planning on selling, ABC business? And it's like, okay, well, if they're selling in 4 years, try to harvest as much losses because we know there's going to be a big gain in 4 years. Is that accurate?
Yeah. And I know Keith's not here with us today, but we've worked on that with a few different clients.
Yeah,
and it can be, sorry to interrupt, Eric. I mean, it can be a business, even if you're a business owner, but it can be a home. I mean, I did have a client that he owned a number of different rental properties, and he knew the plan at some point in time was to sell not all of the properties, but one at a time.
He had some gains in there, right?
He had some gains just with all the depreciation on the basis, and so he said, okay, hey, let's build up a whole bunch of losses. Not that we want losses, but it goes back to, Derek, what you were saying. I mean, there's always opportunities out there, right? Yep. So taking advantage of it, and then we were able to bank roughly about $50,000 worth of losses. He only sold the property last year, but he carried it over and offset. I mean, that's what's 20% or whatever. I mean, taxes lost on that amount or saved.
Massachusetts and all that. It's thousands of dollars.